Hi there, I'm Paul Bevan, Senior Advisor and Mortgage Broker at Dream Financial. Now today I just wanted to talk about some of the influences in the home loan market that I'm seeing at the moment and how that relates to the overall property market. Most people in real estate or in property or in finance will often have a very positive outlook on what's going on because it's typically better for them, for people to be buying property and for prices to be going up. But I want to give you a realistic outlook of what I'm seeing at the moment and my perspective on what's going on. For what it's worth. So anyway, let's crack on and we'll get into it. So I want to talk about access to credit today. So obviously, as a mortgage broker, we're dealing with a lot of lenders, dealing with a lot of clients as well, obviously, in their different financial situations. But what we're seeing, obviously, at the moment is with the lenders, when they're doing their serviceability calculations, so basically assessing how much you're able to borrow based on your income and your expenses, seeing some widespread changes, I guess, as it were. So this is across the industry. There's a few exceptions, but generally across the industry. So the minimum expenses that lenders will calculate your servicing capacity on is going up, and we're seeing that pretty much across the board. So there's basically some minimum expenditures, based on your circumstances. So, whether you're single or you're a part of a couple or you've got dependents, etc. So as your expenses go up or as they're calculated, obviously your borrowing capacity is going to come down. The other thing that's happening is assessment rates are going up. So there's a minimum assessment rate that your loan and borrowing capacity will be assessed at. So you might see a 4% interest rate advertised. However, there's a minimum rate to allow for interest rate rises that your loan's assessed at. So that could be 7.2%, for example. Okay, so there's a big difference there. And those minimum floor rates are tending to go up a little bit there as well and have over a period of time. The other thing is for investors, so rental income. You might think that 100% of your rental income is included. For example, you might be getting $400 a week. Most lenders are really only including 80% of your rental income in your serviceability calculations. So rather than that $400 a week being included, we're looking at $320 a week. So again, over a year, that can make a large difference, and obviously, again, affects your serviceability and affects your borrowing capacity. Now, access to credit. So basically, if you've got a lower borrowing capacity, you're going to have less access to credit or to a lower amount of credit. Now, obviously, that's going to have a flow-on effect. Now, what that effect is basically that's going to dampen demand because you're unable to access as much credit or spend as much. And in turn, we know that when demand falls, typically prices fall as well. So I think that's something to be very wary of at the moment. And in terms of what I'm seeing from a finance perspective and the flow-on effects that can have, I think that's some signs there in terms of a reduction in the access to credit, a reduction in demand, and typically, again, as I said, the flow-on from that is a reduction in prices. So it's simple supply and demand there. So just to recap, in terms of serviceability, what we're seeing is a lowered serviceability and lowered borrowing capacity, generally speaking, across the board, across lenders and across different personal circumstances for our clients. Minimum expenses being included is going up, assessment rates going up, and the amount of rental income being included is going down. So there you have it. That's what I'm seeing at the moment, and just wanted to give you a realistic update of what I'm seeing in the market at the moment, as I said, with our clients and across the 25 or 30 lenders that we have access to. So hopefully that's been informative for you and provided you with a few things to think about.